Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons and I'm with Greg Willett, the Vice President for Research and Analysis at MPF Research. And today we're talking about the Buckeye State, Ohio. And let's start it off by looking at occupancy rates in the four major markets there. Columbus at the top, 94.2%, followed by Cleveland and Cincinnati in the middle of the pack, around 93%, and Dayton way behind at 90.4%. All saw pretty similar occupancy growth in the past year. Greg, looking at this chart, what do you make of it? What jumps out?
Well, these occupancy rates, the pattern at least, is pretty much what you expect to see in the Ohio markets. You almost always have Columbus on top, and that really reflects that it's probably the soundest overall economy in the state, helped by state government. You certainly have a big education sector with Ohio State being there, some technology as well. So overall okay, and then go to the other extreme. Dayton is always at the bottom for Ohio and pretty much always close to the bottom for the U.S. as a whole. Go back to the economy story. This metro hasn't on net had any real job growth since the late 1990s, so gradually trickling down every year over the last decade or so, and now down about 15% from where it was back in the late 1990s.
And annual occupancy change, pretty similar results all throughout these major Ohio markets. Any surprises at all?
Well, helping the Cleveland story, this is a metro that actually has started to get back on track in terms of generating a few jobs, so some good progress there. Otherwise, I think by and large, we're pretty much shifting people from one housing type to another in most of these markets. The fact that the single-family home market is struggling a little bit certainly helps the apartment sector in these metros, and particularly I would say that is true in Cincinnati, which has one of the highest home ownership rates in the country, and just holding some people into the apartments rather than having them move out and purchase single-family homes makes a difference for that market.
And speaking of Cincinnati, that leads us into rent change in 2010. You see in this chart here, Cincinnati is at the bottom of the list, rent growth of just 1.5%, while Columbus, Cleveland, and Dayton were all just above the U.S. norm of 2.3%. So from what you were saying about Cincinnati, the issues there, does that tie into the lack of meaningful rent growth in Cincinnati?
Yeah, I think it really does. And it's just hard to get the rent increases to stick in Cincinnati when it's a metro where if you've got a steady job, it's pretty affordable to buy a single-family home. You look at the other metros. If there's a surprise there, it's that Dayton was able to get rent growth of more than 2%. That year-end number was really a little bit better than the metro had been doing all throughout the course of the year, and it wouldn't be surprising if maybe operators have overreached a little bit. You're not going to sustain that momentum as we move ahead in Dayton.
Let's close it out with your crystal ball. What do you expect from these four markets going forward?
Dayton, it's hard to say something particularly positive about Dayton other than maybe we don't really expect it to backtrack. Certainly below the U.S. average in terms of its performance. Cincinnati, again, so-so. It is one of those metros. They'll be better off with, you certainly want employment change to go positive, but if it really gets going, you just start losing people to single-family home purchase, so that you want modest growth there. On the other hand, Columbus is going to be a good story, very favorable in the outlook for that one. And the surprise in the group might be, in fact, Cleveland. As I mentioned, you've already got some job growth going there. As we're coming out of recession this time, surprisingly, looking at the nation as a whole, manufacturing is playing a big role in the progress, and you've got some really solid manufacturing job growth in Cleveland at this point. And also it's a metro that's getting a lot of attention for their ability to generate some entrepreneurial startup jobs, and particularly in the areas of biotech and clean energy. Cleveland is coming on in that, and if they become a player in those couple of industries, that could be a real game changer for this metro.
So there you have it. Cleveland rocks. That could be a surprise. So for Greg Willett and MPF Research, I'm Jay Parsons. Thank you for watching Apartment Market Dynamics.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.